All right, welcome back to Hot Stocks. I know the market is the headline, but viewers would remember that day before yesterday we had Neeraj Dewan speaking about SRF. The stock had already gained quite a bit then, and he recommended it. Then we had Ashwini Gujral recommending the stock yesterday. It showed a price and volume breakout, was up 20% yesterday, has done reasonably well in today's session as well. And if you look at the last maybe 2 weeks, it's been a big winner. The stock has hit a fresh 52-week high as well. Lots to talk about with Mr. Rajendra Prasad. They don't normally come on TV. We're glad to have them. The CFO of SRF, he joins us right now on the show. Mr. Prasad, really good having you. Thanks so much for joining in. So, I'm not asking you to comment on why the stock price has moved up, but it has moved up. People have suddenly taken a liking to businesses such as yours. Tell us what's happening with the company. What in your business is doing well for people to suddenly start liking the stock so much?
I think the way probably the market is now realizing that we are getting into a new business and there is a lot of capex on the ground which is soon going to be productive. So we've been on this capex journey for the last 2 years or so. So some of it has got capitalized and is already yielding results, and some of it will get capitalized in the coming month and maybe in the next few years. So I think the story is gelling for the investor that this is a diversified company getting into new areas, has put in cash on the ground, and even in the leaner period when the economic situation was not good, we continued with our capex, and I think the story is, as I said, coming together.
So what in the story? Now, you're a multi-business company, 3 broad segments: technical textiles, chemicals and packaging films. Let's talk about the chemical business, because I think that's the big trigger. The market is liking a lot of such companies as well. How is that business doing for you, and how do you expect it to do over the course of calendar year 14?
Yeah, what has happened is, one, the entire environment for the chemical industry looks good. And a lot of business is coming into India and from overseas as well. So the industry and the environment of chemicals looks good. Now, chemicals itself has various segments. It could be organic, inorganic, new chemicals, emerging chemicals, and so on. Our strength lies in handling the fluorine molecule. So we are there in fluorine chemistry, which itself is a specialized space within the entire chemicals, the gamut of chemicals which is being produced. Along with this, just saying that fluorine chemistry is our niche is maybe 60-70% of the story. The rest of the story is our R&D capability, which we've built over the last 10 years or so. So there is some sweat and toil which has gone in building this platform. And that, I think, has long-term and endurable results which the market is seeing. So we feel quite positively about this segment that we operate in. So it is not just commodity chemicals. Part of the expansion that we are doing is in refrigerant gases. Part of it is in specialized chemistry.
Okay, so let's put this into numbers.
That's what it is. It's basically fluorine.
Okay, great. So let's put this into numbers. The chemical division and the refrigerant, as you just mentioned, what's the kind of growth that you've shown in the last 3 to 6 months? Because that's when the CER business has gone off from your books. And how do you expect the next 3-4 quarters to look like? You will see a 40-50% CAGR growth. Is that a possibility?
See, if it'll be a little, going out risky to comment on too much on the growth numbers in the future. But if past is any indication of what the future holds, over the last 4 years, if I was to go back to 12-13, and I think the specialty chemicals was 60 odd crores, then it became 90 odd crores, then 138 crores, then it is 280 odd crores. So it has been increasing at a pretty steady pace and a sustained pace. Now, what is also true is all this was coming out of one facility which we had at Bhiwadi. Now we've set up a new facility at Dahej, which we have been working on for the last 3 years, and that facility today is one of SRF's largest facilities, and it's a chemical complex. So that naturally one would expect by, deductive logic that if I've put on around 1500 crores there, it will yield the top line and the bottom line. So this business will grow for us as well. I will not comment on an exact number, but I think past is a good indicator in this case. Past is a good indicator of what the future in the chemical business for us would look like, especially in the fields that we are getting into. So that is, I think, what the market is seeing also. And in refrigerant gases, we are the only manufacturers in India of a gas called R134A. And that particular site has, we've expanded our capacity from existing about 4,500 tons at Bhiwadi to about the capacity, the plant which is going to get commissioned shortly is 12,500 tons. So it's about 2.5 times what we have, 2.5 times additional compared to what we have today. And we are the only manufacturers of this gas in the country. And globally, there are certain indications which augur well for us for this gas particularly. These are not some things that we are doing, but the environment for 134A is changing globally, the business environment. So hopefully this too should be a good, I would say a good bet that we have taken.
Okay, fair enough. Mr. Prasad, I know you can't talk about earnings in specific, but just two numbers really. One on the kind of margins that your chemical business has over the long term, 3 years plus, and also I think analysts are banking on the fact that it's the return on capital employed from this business is fairly impressive. So what's the targeted ROCE that you are expecting from the chemicals business first?
Normally we operate on an IRR basis because we want to give some value to time as well. Okay, because you invest today and you need your returns considering the cost. So we take IRR. And internally we have a cutoff before we approve projects. So naturally the new businesses that we are setting up have to cut the mustard at that level. And that itself takes into account cost of capital for us, cost of equity, cost of debt. So no matter how low we are able to raise debt at, the percentage there, the IRR target that we want to achieve in this kind of business is around 18 to 20%. Now this is on the investment. Now on the margins, margins are indeed looking very good. And I would say that, again, if one is to analyze the past, I don't think there will be a stupendous erosion in margin, but naturally, over a period, many products which were niche earlier become commodities. And as they become commodities, the margins drop. This is where the R&D comes in, that we need to stay at the edge of the game and we need to be able to produce newer and newer products which remain niche products. So as certain products fall off the top and become commodities, but we continue to make them because they still yield contribution. But at the same time, we are able to add newer products which add to healthier margins. So it's an entire portfolio of chemicals which we should be able to build.
Sure. Just one more question then, since we talk about the refrigerant business as well as the chemical business. It's your presence in both these markets is fairly substantial. You have almost a monopoly, so to speak. So could you highlight the kind of market share that you have in the chemicals business right now? How much are you targeting to increase it by? And how much is the refrigerant market expected to go up, since that is a market that only you service?
See, like I mentioned, there are two types of refrigerants that we make. One is 134A, where we are the only manufacturers. So where imports are allowed, and our consumers who are automobile manufacturers, this is used for air conditioning. So it goes into air conditioning in cars, it goes in refrigerators, 134A. Yeah. So, this we hold about maybe a 40-45% market share in 134A. The other gas is R22. Now R22 is a gas which will over a period be expected to phase out under the global protocols. So there as well we have substantial, because there are 3 or 4 companies which make this in India, and we are a significant player. So overall, if you were to combine both the gases R22 and R134A, we would have a pretty healthy share of this market. In the chemicals, see, other chemicals we need to fragment the market to be able to identify shares. It would be wrong to, club apples and oranges and then try and define a market share. Because there would be certain chemicals we are the only ones who make, but they are small components. So that's
great. Mr. Prasad, all the best. Keep up the good work, and we hope to talk to you post your earnings as well. Thanks so much for taking the time out and being with us today.
Thanks a lot, and thank you for having me on the show. Thank you.
That's SRF, a strong move that has come in for this stock. But quickly getting trading ideas from our experts. First getting Ashwini with his option strategies for the day. Ashwini.